Because if defaults get worse, does that not increase the risk of systemic spread simply because of really an unknown number of cross shareholdings between the Chinese property developers?
Yeah, I think there are a couple of things here. So we've been saying for some months now that it is possible to see more defaults, but it's critical also for policymakers to ensure that these companies will continue on their completions, because what that would avoid is a massive fire sale. It would avoid liquidation of the companies, and it will set up a more sort of longer term restructuring. And we think this reported fund is aiming to do that. And also, if you look at the China defaults in the last few years, the China policymakers have really shifted away from trying to do bailouts of companies, even state-related entities. So we think they also are not in a position or will refrain from doing big bailouts. So it's a way, we think, for them to try to avoid a lot of the negative sentiment and to ensure that the completions will continue. But at the same time, this longer-term restructuring and this medium-term deleveraging of the property sector will continue. Now, it's also interesting to note that if you look at the property sales for the larger state, especially the state-related developers, they've really largely recovered to where they were around a year ago. But for the private developers, especially those that are under financial stress, they are substantially below where they were a year ago. So what we think this creates is actually a bigger differentiation between the weaker and the stronger developers. And so we think that's really the path that we're going down.
So I have to ask you, I know in terms of China high yield, which is essentially shorthand for Chinese property developer high yield bonds, you think the value is there right now, could be worth a bit of a punt, as long as you stick to IG investment grade or rated names. Is that right?
Yeah, so we think that overall our preference for Asia high yield is for non-China property, just given the fact that we're expecting this very long tail of defaulted companies or restructuring candidates that will need a multi-year restructuring effort. But at the same time, similar to what I was saying earlier, if you look at the better quality developers, many of them state-related, many of them investment grade, and they are actually recovering a lot faster. And so we think there is relative value within the segment, but you really have to stick with the better quality developers. And we think the value is actually in some of the longer dated bonds, because those have lower dollar prices. And we think that gives you a little bit more protection from a bond price perspective as well.